Okay, what's going on? What's going on? Let's continue on for the DRC for Thursday, August the 7th, 2025. So we just came from the last video going over Wednesday. Remember as well, we are using the DRC template, right? So I'll kind of talk about in this one more of the bias and the setup expectations, some key levels, right, that we were looking for, some areas where I improved upon for the day. I'll just start with those. The selection and the risk placement, 15 and 5 minute signals, right? I executed well with what I was able to see and anticipate from a buying and selling standpoint. Reading the higher time frame to lower time frame structure technicals. Um, so those are the things that I personally had focused on. And then also just buy low, sell high, like a good mindset of, giving back in the right areas. And then in the area of what I learned today, on the sells, just make sure you identify the 5 minute fast up candle. Make sure to use that as a reference point on the framing up of the trade. Let's see here. Daily wick. Does that focus on price action when it reaches? So that's done. Okay, and like changes to make from today is just make sure I don't manually exit. So we'll see if there was some kind of position. Maybe it was on CFD. I don't think I did on futures, but maybe it was on CFD. Um, just walk away. Sizing when it comes to futures, I maybe could have sized the move a little bit better. But for me as well, when it comes to shorts, I don't really personally like to size too crazy. I actually kind of use a little bit less volume because I'd rather buy my take profit a lot of the times. So yeah, so overall grade for the day was a B. Day type for me was, buyers were taking profit on the week. Uh, and then they are not on the week, but just on the position of where we were. So look, I'll bring up a chart here, but this is what we're going to be going off of here for the DRC for the day. And so to catch back up to where we were coming from Wednesday, yesterday, we found buys up, right? That attacked those shorts from that previous day, Tuesday. And so now if you think about it, like this is the start of the week, right? So I always mark, me personally, like to mark the start of the week, and then this is the end of the week, right? And so at this point, when you look at technicals on a 4 hour and a 1 hour, we've gotten on that Tuesday, we got a high, we came back down, we made a higher low, right? We never like broke lower, right? And then we ended up closing higher, right? Right here. And so where did we start to close higher, right? Well, it was the first candle of Thursday. Okay. So now we'll kind of break this down from like a 4 hour, 1 hour down to 15.5, 1 minute perspective. Okay. And so now what we want to do is we want to mark the daily open. All right. So this is the daily open for me for Thursday. All right. Thursday's daily open. Okay. And so what I was anticipating was from the previous week, right? When you're thinking about last Thursday, right? When this like Thursday and Friday was the day when these prices just went crazy, right? This right here was Thursday, 9 a.m., just destroys price down, right? On that left side. And then you had Friday where it just pushed even more, okay? And so now when you hit the bounce area down here and we started to buy up, so let me kind of just show that what it looks like on the 1 hour as well. All right, because you want to be able to see that. When you're seeing that sell down from Thursday of last week, most likely because of the timing of this, right? This was 8 to 9 a.m. I remember because we took shorts down into this demand. So I know a lot of people like when it comes to like CFD, because we take swing trades as well, this is how we're able to gauge these intraday trades so well, is because we have an understanding of the order flow from holding trades as well. And so what I'm anticipating is from last Thursday at this point, on Thursday, right, like right here, is that we're coming for this part of the range. We're pushing up on 4 hour supply, right? When you really look at a fib retracement of this whole thing from like this high to this low, so like this, once we bounced and buyers really stepped in, above market open, then we cleared. I'd say on Wednesday, we made that new high right here. It's clear signs we have a good chance on the range to play back up to this trap candle here on the 1 hour and to get back above 23,600, right? Because this is where we blasted, right? So now we're at new levels essentially right here from Wednesday. And then we open here and overnight, you guys see the price. That's why I like to mark these in the blue. And I'm kind of leaving the 4 hour open so you guys can just kind of see, but this is how I like to mark them. But as overnight price goes into Thursday, right? Price goes up, comes back down. And then what do we have? 2 a.m., which is a very important time, just like New York, right? This is London open and price rallies, right? So it's already making new highs on day before I even look at the markets at 7 a.m., right? And so for me, this lets me know based on where we're at, if you guys kind of have an idea, right, is that we're pushing into that 78.6, we're pushing into that 88.6 of the swing, but at this point, we're just right here, right, at the 78.6. So this is a really, really nice push when you're thinking about from the market open lows to this point of the week on a Thursday, right? And so what I was anticipating after seeing, like I said, this and then them close 3 to 4, 4 to 5 a.m. candle, right? Already going strong. I was already anticipating that buyers from that overnight and the previous session, if that makes sense, right? Because we also take swing trades as well. So, and from the previous session, were possibly looking to take profit because I know that from my CFD position, I moved it to the new low of day. Like when I seen London open, I woke up around like 5 a.m. that day and I seen London open and I moved my CFD risk from this low, right, to this new low they had created on the day. Right. So now if you start to kind of see what I'm saying at this point, when buyers take profits, when the best sell is going to come in the market. So I'm from a swing standpoint, I'm anticipating, when am I going to take profit on my buys from 23, let's just say 150 to 200s, and then I've got trailed risk, and then at the same time, I'm like, okay, well, when are these guys going to release those orders, right? So let's dive into New York here. All right, we'll go 5 and 15 here, and we want to do this will be for the 7. Okay. And so this is like my favorite type of price, guys. Like this is essentially what they did was the same price they did right here, right? So if you look at it like this price right here on the left side, they ran higher, came back, mitigated into the 15.5. We ran up, we took high of day, and then we just, skyrocketed it up, right? So the same, rules personally that I look for on the buy side, I look for on the sell side, right? So high effort candles that take out traders in an up thrust after distribution type situation is when I want to see to, play that. Now, also I like point of interest, right? So I'm always going to be marking up in that day trade, right? The New York Open, right? So this would have been the New York Open, right? And we'll go in, we'll dive into the 1 minute as well, because that was very important. So now what I was looking for was because pre-market, if you really think about it right here, right around, I would say like 820, 825, people were wanting to sell this potentially because they were seeing it like almost like this, right? And they had seen us swipe a high on day and they were thinking like maybe it was already done. Like this hadn't printed like this yet. It looked like almost like this. And so that's why I said a UTAD, right? An up thrust after distribution, right? Because they've already kind of wanted to like make people like, to trick them into this area in a sense. And so instead of me just taking a a trade where I'm just gonna take like a random, just push like anywhere where it pushes up, I have specific things I look for, right? So one thing is the same thing I look for on the buy side is the dump candle. Well, in this situation, I like to see a 5 minute push up candle, right? Now, once I get that 5 minute push up candle, we're pretty much focused on 50 levels and whole levels, right? So 23,500, 23,550s. Now, this price level on that day, because I have other markups, 23 650s, right? 23 650s, it came up to that level, 15 and 5 minute high effort candle, and then you had a 5 minute sign of weakness, right? So from New York Open, let's go and dive in a little bit more, and I'll kind of show you guys how I played this in the beginning. Here's this. Okay, cool. Okay, so because we knew we had trailed risk on those CFD swings, what I was personally looking for was on a 5 minute, excuse me, I looked for that first sign of weakness. So basically, it was very choppy at New York. Like if anybody would have played, the way we like to usually play, like right in here on that 1 minute, So you got that first pop up, like, it was a manipulation down, then they go up, they make a new sign of strength, they come back into the demand area and they extend up. At that point, if I would have played that position, I would have already, trailed risk and pretty much to like in this area as the price started to close higher. So I wouldn't have, I just wasn't looking for an order like that because I was looking for shorts to potentially present. And so what I waited for was, price basically, kept going, right? It went here, destroyed buyers, so it had a New York low. They went higher and then they destroyed New York low, right? Then buyers probably stepped in again, trying to push that price higher again, right? But the 5 minute price, like I said, we were what we were waiting on. And so 5 minute gives us that around like 9 a.m. So that this candle was 8:55 into 9. Then we had our sign of weakness candle. Now, inside the first sign of weakness, what I'm looking for in that second candle is the 1 minute mitigations, right? So essentially what I mean is something like this, right? Like I'm looking for, you know, this type of area to form inside that 5 minute candle, right? So it's going to look just like this, lower low, lower high, right? And so I'm trying to get the best spot for that area also by counting down from the risk, right? And so a 20 point risk would have been 23,650s, right? And so on CFD, we were definitely striking, and then we took our futures position, mine personally from this day was a little bit later. Like I seen this, lower low, lower high, I seen the break, I seen this, and then I ended up taking an entry closer to 919, 917. Let me take a look actually when I actually took that trade. This is Thursday, correct? Nine Around 918. Okay, so 918 was like right around here. So I took the trade. Um, I had taken my trade very aggressively on CFD, putting risk at HOD, which was exactly what I wanted, and then was a little hesitant, but still had what I wanted, which was the 5 minute supply area. And so I took my trade, what it says here on TradeZilla is at 918. So right here when price was in here, I ended up risking from here to here, I believe. No, that wasn't the risk, it was to here, excuse me, this prior bar right here. And then I was just looking for price to continue down to our LOD, right? Our low of day. So we had low of day actually was even all the way down in here. But what they did was they had created on a 15 minute, let me go back. On a 15 minute, for that Thursday, they had created in the first 15 minutes of the open, right, an expansion, right? So they had basically, extended the price up to new levels, right, like up into here. But they created this massive candle right here on the left, creating that imbalance, that inefficiency. So, they had a lot of people that were, that's why I had this as a key level, 23,450. Had a lot of people that were stuck here that had bought overnight, and then they, most likely didn't, do the right things for that position. So, yeah, so that's basically when you're going down to the smaller time frame and you're looking for, and you're looking for where we were targeting on those shorts, you'll see that it was basically right there on that area on the 5 as well. All right, sorry, I'm doing noob stuff here. All right. So where was that area, right? Like at first, right? This was like one of my main TPs, right? On that, because I had two contracts on this to the downside. So one did pay itself here, and then I started to track the rest of it down as the market made money available in our trailing rules. And then I started to trail it down, and then eventually it finally came and got me out. But on that 1 minute, that price down was so amazing, right? Lower low, lower high, lower low, just really efficient on the way down to below daily open, right? So that's the main key is like, this is where, what did I get better on this week? Every time I took an entry this week, one thing I will say is like, I was in the mindset of buy low, sell high. So if I sold a position, I felt like at the high of day, which at this point, right? Overnight, London, New York, at this point, I needed to give that order back below the daily open, right? To essentially where who would be coming in? Good buyers, right? To be on the other side of that order, which you would see the fast responses from. right? And so that's where we had seen that order. Like I said, my entry was right here in this 18, right? I think it was like the 614s right in here. And then I had a risk of this prior bar area on the 1 minute. And then, like I said, getting back below, right? Like I said, back below these London area lows, 23 550s. And then I really just wanted that 23 450. So this is like a 200, almost 300 handle move, right? And this day, definitely was, almost a $2,000 day in itself, right? On the way down with just those just those two micros. So there's a lot of room for improvement. I would say for myself, I did, one of the main things I focus on isn't really the P&L, but the execution to get the result. Okay, so getting the 5 minute fast up candle, all right, getting that sign of weakness, inside that sign of weakness, getting a 1 minute mitigation, and then being able to see price just capitulate because, right, now we go back to the higher time frame understanding because, right, when you think about Thursday, right, price capitulated back to where? Look at it from a higher time frame perspective, right? Because we've been bullish all week making new levels, right? So price capitulates back below daily open, right? People start to take profit where on individuals from if you took a buy here and you trailed your risk to top end and balance, like that how the way we do it, and you never took profit, like you never moved it with that new low of day, or you never scaled out in a specific way, then of course, yes, they came back. And the same move that we shorted down to, that's where I believe the markets, because I take swing trades as well, are coming back for that trailing risk trader. Right. And so, okay, now they've come back for the trailing risk trader. Why do you see a 1 hour wick? 1 hour wicks turn into 15 5 minute dumps, 1 minute mitigations? Because you're seeing shorts start to cover, right, from the New York position. And you guys, this was crazy in the second half of the day, right? This was 2 p.m. to 3, right? Power hour. Power hour move. Look at that. 23 400 up to 23 500, right? Buyers immediately stepped in, right, and wanted that 23 550, right? So I was looking at monthly open for August. I was also looking at the half level because we know those are psychological levels. So 23 550 is hit, right? We had shorts, bang. Most of my take profits on futures all banged here at 23,400 on that day, banger day. And then, right, came back in and bought my take profit on CFD. Does that make sense? So essentially I had a short. I knew that a lot of shorts were going to be taking profit. So I thought it'd be a great idea to go over on my CFD account, right, NAS 100, and take buys to the upside swing trade to eventually break this 4 hour high, this previous day high now at this point, because when we go into Friday and we talk about Friday, correct? And so 100 point move at the end of the day, that's just a really good sign of short covering going into your next day, which we'll be going into here in just a second on the next video. But I hope that makes sense. We were very selective all week so far, right? Continuation trade on Monday, buys up, right? Made sense because how we started the week, right? Let's kind of replay that one more time. We started the week when Monday would have been here and all the prices what you're seeing, this is all we started off with, right? Capitulation. Look at all those. Those are 1, 2, 3, 4, 5, 6, 7, 8, almost 9 4 hour candles bearish in a row coming into the new week, right? And so to see the short covering, right, makes complete sense. The selection, like I said, took buys here. Swing trades that we had, we ended up trailing them, right? We ended up trailing them. And when we took those shorts, because on Tuesday, right, futures and CFD, we had already trailed our risk up on the buys that we had. So those did get canceled, but we were able to add on essentially the same price that we bought that New York from Monday around that 23 150. So you have to look at the CFD price, but the location is basically what I'm talking about. Okay. And so our selection was good here on Monday. Good area to give back, right? Because you want to be focused on where you're going to give back some of that order to get a better dollar cost average maybe in the later part of the week. Coming into Wednesday was really nice. Bounce off 23 150s. Beautiful 15 5 minute, 1 minute play. And I believe this was the day of the divergence that we talked about on ES. right? And how they manipulated people on those lows and then rallied as well. And then now, right, we came into how overnight buyers, you want to really pay attention to that price, right? Because inside that price of those overnight buyers, what you're going to see is those individuals were winning already, right? Like they had already started to win the trade, right? And so who's an advantage when that next, session opens, right? What kind of liquidity has been taken to the left side, right? And so we'll go into, Friday's price action next. But that was a beautiful short covering to close the day. And then, like I said, going back over those, same moves, you're going to be looking for those 15 5-minute setups and then looking for the turn of the dial, the right time to take the setup. So hope that helps. We'll be going over Friday next and talking about, how we ended up moving up into the 4-hour supply candle. That being said, I hope you guys have a good rest of your night. I'll see you guys on the next one here after I eat some food. Peace.